Well, good day all. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, and we're at the 3rd of June, 2019, 4:31 p.m. Central Daylight Time. Well, government seems to be after Alphabet, Facebook, and a bunch of other companies, so the techs are getting hit. Market worrying about these companies get too big, and that could create no competition, blah, blah, blah. Okay, we've heard that before, but remember, now you have Democrats in power over Republicans in the House, and that impacts things. As you take a look, you can see a general down day in the S&P, but not the Dow. So it was mixed with the exception of the NASDAQ. The market that was more interesting was the currency markets. They're taking it on the chin now as the market is starting to no longer think the dollar's the best game in town, and it's wondering if we are not hurting ourselves on trade. We're seeing certain trade numbers come in. They're starting to slip. The first impacts of this U.S.-Chinese trade war are being felt. More tariffs went on over the weekend, the Chinese tariffing our goods. I don't know where we're going with Mexico on these tariffs, but tariff. The only people that pay the result of that are us. Do not believe that they pay that. If you believe that, you are sadly mistaken. The Americans pay the tariff. It's really that simple. You can go to college on it and say, well, if the company eats part of it, blah, blah, blah. The point is, it's hurting corporate earnings. And if you hurt the corporate earnings, where do you go this summer? And that's what you got to ask yourself. You can see that the energy market under some pressure here too, and it's under pressure as the market is concerned that as these trade wars take its toll on world economies, what's the demand for energy going to be? It got a cushion today when the Saudis talked the opposite end. Remember, the Saudis were talking of still staying within the quota, but raising production because they're so much under it. Now they're starting to talk a little bit like maybe they got to keep numbers down to keep the market rightly balanced. Their goal is not $61 for crude oil. It's $70. So you're nowhere near it when you're down there. When you take a look at the weekly chart of indexes, you're down 0.11% or 2.9 points for the week so far. More important is how the market is just stretched down. You're starting to hear lots of commentary about the December lows potentially coming into play again. I'm not saying it is or isn't happening. I'm telling you there's a lot of talk about it, not from me, from those on financial TV, a lot of it. We're into an important area, this last break low here, as far as I'm concerned, and we're knocking on the door of that. When you take a look at this chart, there is nothing pretty about it. You've accelerated the slope to the downside. The market's got a clean pattern of lower highs, lower lows, and now what you're going to do in moving averages is you've got this cluster of moving averages between 2784, the 200-day, all the way to the 18. TikTok today, Bloomberg had asked me to do a commentary on this. And now what was support, the 200 and the 100-day averages, and you had that just last week, now become a resistance point because you've gone under that. So I'm now starting to see layers of resistance, not layers of support there. And even the Bollinger Band, you're running. So you could afford to get under and over the Bollinger Band, get back over it, and still use the 200-day and the 100 as resistance points in the market. And momentum in the market, as measured by the slow stochastic oscillator, has both numbers under 20 today. They were both under 20 on Friday, and they were both under 20 on Thursday. That's called embedded. Takes at least 3 days to embed the way that I teach that. And until the red line closes back over 20, this market on rallies, I say the pros are looking to do what? They're going to be looking, I think, to sell the market short. Lose that reading and I'll change my tune. The NASDAQ has had this, and look at how you're plunging. Again, the same picture. The 200-day, the 100 above the markets. You can afford Tuesday reversal, for example, in the market. You can get it at any point. Why not? But that's still a resistance area, and this cluster of the 18-day average is falling rapidly into it. A lot of resistance right at that point. Today, the Dow shows you a little bit further of the story because you had a bearish crossover where the 18-day got under the 100. Now the 18-day is challenging the 200-day average. You see that? Is this market embedded? No, it is not. This market has both numbers under 20 today. They weren't that way yesterday. So it's the first day of being, well, it's not the first day of being oversold. It's the first day where the markets are under a 20 reading, just an oversold condition. Again, extending a couple of days now. Let's see, Fridays. Fridays closed at 24,820, was under the lower band. So you got 2 days in a row of that. You could pop back over the Bollinger Band. I expect it to happen soon, but I still look at this as very, very formidable resistance in the market. And in the Russell, the market keeps hitting band, turning back up. This is classic bearishness, keeping the embedded reading. Another bearish crossover. Now look at how these averages are lined up. You've got the 18 under the 100 under the 200. That's bearish as can be. I mean, that's a classic bearish formation on moving averages. Those are all the crosses you hear about. So good hard rallies, well, I think you're going to find sellers waiting for you in the market. In the VIX, the one thing the VIX hasn't done is come alive. If it does, I would expect it to challenge the upper Bollinger Band again. It's been in an uptrend, but a crawling one. It is not overbought. I will be surprised to see pros not trying to sell some calls there with the idea of getting back to the 18-day average, which would sort of fit in with my idea that soon you're probably going to get a rally in stocks that carry back into some of those averages we were talking about. In the bond market, you're down near 2% in this bond market. It's unbelievable how this market just keeps going. Is it strung out? You better believe it is strung out. Buying over a Bollinger Band? Nah, you don't hear me ever say to do that, nor do you hear me to say to sell under it. However, this market has really pushed its way out, and it's doing the Fed's job for it. It's just forcing interest rates. Take a look. That was, by the way, the bond, 2% in the 10-year note. Unbelievable action. It's done the Fed's job for it. Now the Fed's chasing the marketplace. So if the Fed starts having to cut interest rates, it's because the marketplace let it down there. And the reason we're dropping isn't because things are good. People are scared and they're taking 2% yields for 10 years. Think about that. They're also getting more negative in countries that are already negative. TLT struck out another new high on this move, embedded reading just like the others. Eventually a correction will hit these. Dollar index went bearish. The first time I'm saying this market's gone bearish since back here in early May. I would expect support to show at the Bollinger Band. If I'm wrong, maybe the 100-day average. The trend down, resistance now rather formidable at 97.60, and getting through this top is going to be a trick now, because with U.S. interest rates falling as much as they are, it's getting the psychology negative on the dollar. Market's starting to say, well, if everything balances out, maybe there's better plays elsewhere. Of course, one of the plays that people are running has been the eurocurrency, to everyone's surprise, but it's here. Higher lows, higher highs. I'll look for resistance at the upper Bollinger Band. In the British pound, getting a bit of a rally. The question is, do you lose the embedded reading? Remember, we're now trying to find out who's going to lead the Brits. Now that Donald Trump's trip is going to come to an end this week in the UK. Miss May's going to step down. We're going to get a new leader. Might be a little dangerous time to be playing the short side of that market. In the end, this is where the Mrs. Wannabes grab their money and they say, I don't want to be there anymore. That's basically what it means. And they're repatriating their money, and that puts up the end. It's not because of interest rates. It's not because their economy is doing good. It's a safe haven currency, and it's running to the upside. It is overbought. It's stretched out over the upper Bollinger Band as well. In Bitcoin, this market didn't perform like gold did today. This market was up $100 an ounce. Gold was the powerhouse. It's void of a trend right here. It's got a lower low, higher high, so we'll have to see which way it goes. Should it lose its embedded reading, I could then make an argument back to the 7,800 level, but it's still been a heck of a year. The one problem with Bitcoin, I don't know anyone that uses them. I know people that have speculated in them. Tell me anybody that's using it day to day. Write me on my page, my YouTube page, because I know of nobody. And tell me what you're buying with it. I'd like to know. Not speculation. Tell me how you're using it other than speculating. In the August Brent versus WTI, coming down. Market through here, I understand, under the 18-day averages you can see. So that spread's coming in at this point. And look at this collapse in energy prices. You're down $13 a barrel. that is 20%. I mean, it's a big break that we've just had if you're watching that, Brent. And that's why I don't think the Saudis are going to sit there and pump more oil at this point in time. But that's a fundamental decision, not a chart. Charts are bearish, but way ahead of themselves. When you're this far under Bollinger Bands and oversold, nah, I don't see any edge in that. Look at how since Memorial Day, gasoline prices, they didn't go up then. It's one of the few years, and how this market has just caved in. The good news, at the gas station sooner rather than later, we're going to get the benefit of these whole prices, the wholesale prices dropping down, and that'll be passed on. And natural gas, as I mentioned before, this is a weather market. Similar to grains, it is waiting for the first hot weather that will come. It's a question of when it comes, but it doesn't have the demand right now. And the reason is you got your windows open. You don't need your air conditioner on the East Coast. I'm not talking Florida. I'm not talking Texas, where we always know it's hot, in Phoenix. I'm talking the Midwest. I'm talking New Jersey, New York, big areas for that. Even LA isn't that hot right now. And that's taking down this market. So you look at it all, you have an interesting time. I'm going to do my metal report. I'm going to do one on gold, I can tell you right now. Gold's at some important areas. So these are video reports. I hope you realize that. I've given up on writing the reports. I think the video reports are so much more interesting. I'm going to do price counts. I already know that. I'll include the seasonals for you in it. I'll be doing it just on gold, the stock, because I don't think the silver chart's that interesting. I'm not going to include the copper or the platinum, so I'm already know where we're at. The report will probably be out in the morning. So don't waste your time tonight going for it. Give me a chance to get to midday in the morning and I'll get this out for you. You'll go to www.iraepstein.com and you'll see the area with our reports, and I'll explain it all in the morning anyways in my morning video. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.